into the exciting world of derivatives. If you are interested in finance, economics, or mathematics, then derivatives are a crucial concept that you need to understand. In this video, we will be discussing what are derivatives, how they work, and why they are so important. So, let's get started with the basics. Derivatives are financial instruments that allow investors to make a profit by speculating on the future prices of an underlying asset. The underlying asset could be anything from a stock, a commodity, or a currency. Derivatives come in various forms with unique characteristics including options, futures, and swaps. Let's take a closer look at options, which are one of the most commonly traded derivatives. An option gives the holder the right but not the obligation to buy or sell the underlying asset at the predetermined price and within a specific time frame. For example, let's say you believe that the price of Adani's share is going to go up in the next month, and you could buy a call option on Adani stock, which would give you the right to buy the stock at a predetermined price called the strike price within the next month. Now, if the price of Adani stock goes up, you could exercise your option and buy the stock at the strike price, which would be lower than the market price, and then sell it at a higher market price for a profit. On the other hand, if the price of Adani stock goes down, you could let your option expire and not exercise it, losing only the premium paid for the option. A future contract gives the buyer the obligation to purchase a specific asset and the seller to sell and deliver that asset at a specific future date. This makes them riskier than options but can also offer greater rewards. Swaps, on the other hand, are private agreements between two parties to exchange cash flows based on different variables such as interest rates or currencies in the future. But why are they important? For one thing, they allow investors to manage the risk by hedging against potential losses. It can also be used to speculate on future prices of an asset, which can lead to profits. However, derivatives can be risky and complex, and they have been blamed for causing financial crises in the past. That's all for this video. We hope that you enjoyed this dive into the fascinating world of derivatives. See you in the next one.